The Seasoned Risk Manager. The man who went bankrupt with a single trade, James Cordier. James Cordier, the million-dollar fund manager and the author of The Guide to Option Selling, went bankrupt in a single day. His 300 clients lost all their money. About $150 million was washed out in a single day. Natural gas commodity was the culprit. Natural gas price enjoyed their biggest one-day percentage gain in 8 years in November 2018, only to suffer their largest one-day loss in 15 years the very next day. Writing OTM options in huge quantity was the root cause of his misery. The real culprit is position sizing. The probability of getting back to break-even is very high. If we only lose 30%, 20%, or even better 10% of our account. If you hit the daily loss limit, then you say no more, close all trades, walk away from the computer. Wait until the next trading day to trade again. Never lose more than 2% of your capital in a single day. For positional traders, never lose more than 5% of your capital in single month. The crux of risk management. 1. The risk and reward. 2. The betting size. 3. Static position sizing. 4. Dynamic position sizing. 5. Drawdown management. The expectancy of a strategy is a function of win rate and risk reward. Betting size is called the pulse of the trade. It is a double-edged sword. Alexander Elder proposed a betting size of 2 per trade. During a drawdown, reduce your betting size. The dynamic betting size model. 1. Always start the journey with 1% betting size. 2. If you have 20% profit on table, think about 2% betting. 3. In case you are beaten down to no profit level, go to 1% betting again. 4. If you have a 10% loss, cut down your betting size to 0.5%. 5. If you have a 20% loss, it is time for you to say caution. 6. If you hit 30% loss, stop trading and go back to your boardroom. 7. Investors are eligible for a drawdown greater than 30% as they hold the asset. 8. Static position sizing. 1. It is a process where your betting size is always fixed. 2. If you stick to one betting size, you will continue to follow it forever. 3. Algo models are based on this concept because all the drawdown effects have been factored into the system. Dynamic position sizing. 1. It is a process that will keep changing the betting size based on traders' performance. 2. It will reduce betting size when you lose. 3. It will increase betting size when you win. 4. This simultaneous adjustment will keep the equity curve balanced compared to static position sizing. In dynamic position sizing, the betting size is a function of ending capital, not initial capital. Van Tharp R principle. R means risk. He defined everything as a function of R, risk. Van Tharp books, Super Trader, Trade Your Way to Financial Freedom, Safe Strategies for Financial Freedom, Trading Beyond the Matrix. The Equity Millipede, The Unknown Australian. Equity millipede is a lovely concept designed by a forex trader from Australia in 2009. This concept has been followed by many across the world. He is a trend follower and only focuses on taking trades which may not hit the stop loss in a day, week, month, year, or decade. Scale your trade when trade is in your position. You may take new positions as you are winning in one trade. The fundamental idea of equity millipede is to take as many low-risk trades as possible. It does not care about the stop losses being hit. All it cares is how many trades sustains the journey. M has trades which have moved from daily to weekly, weekly to monthly, monthly to yearly. He has many trades which have given 1:100 RR2. His dream is to move as many trades as possible from the yearly to decade mode. Position sizing and risk management is the ultimate essence of any trading systems. Legendary traders are those who strongly believed in position sizing only. They never really cared about the strategy and its intricacies. Always follow dynamic position sizing model. Stick to a betting size of max 2%. Anything more can be disastrous soon. Market goes in your direction like a flower river. It goes against you like tsunami. Manage risk and trade well.